Intel. They've not been getting the best press lately. And to be honest, rightfully so. Extremely bad earnings report, bad guidance, problems with the 13th and 14th gen CPU as well, although I have some news with regards to that. But all in all, Intel did manage this whole situation quite badly. I'm not talking about the earnings report because obviously that quarter was managed very, very badly as well. Huge restructurings for the company. We're going to talk about that in just a second, but I'll share my thoughts as to when I will be adding more to my Intel position. Right now, it's true, stock is down quite a lot. Year to date, the stock is down 60%. Yes, Intel is down 60% year to date. It now only has a market cap of $84.6 billion. Now, look at this. Forward PE, 47.5 times. You might say, how is that possible? Year to date is down 60%, and the forward PE of 47.5 must have been extremely expensive beforehand, no? Well, no. And this is the tricky part. This is when only looking at valuation is wrong. Only looking at what analysts are expecting is not enough. Of course, now the analysts expect decreasing sales, decreasing EPS for this year, but then a little reacceleration, especially for earnings, for the coming 2 fiscal years. Sales growth, not by much. And if you're wondering what the average analyst price target is, well, it sits 47% higher than the price we're at today. Yes, there was a huge decline, of course, a huge drop, but still 47% higher than the price we're at today. Now, let me show you what happens when you only look at these valuation metrics, especially forward-looking ones, right? Forward PE, EV to EBITDA, price to sales, and then price earnings to growth. Look at this. Before the earnings report, the stock forward PE was trading at what, 24, 25 times? So you must have been thinking, oh, okay, not that bad. Well, not that bad after that horrible quarter and guidance and huge restructuring, extremely bad because now we're sitting at 47.4 and the stock is down 30%. Now, it's true that for other things, for example, price to sales, that is much lower than its 5-year mean. It's at 1.6 times, so that's fine. EV to EBITDA, 9 times, is now much closer to its 5-year mean as well of 8.8 times. But previously, before that jump we had here back in January 2023, it was under. It was closer to 7 times. Price earnings to growth, still low at 1.19 because, like we've seen before, they expect a huge rebound in the next fiscal years. And so let's go over a couple of things with regards to Intel. Before doing so, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We'll really appreciate it. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Let me share with you a little meme that is very accurate. So on top, you've got the recent 100 meters final at the Olympics. So that's the state of LLM models. Lots of models, all of them, if not most of them, are doing exactly the same thing. But the state of the GPU market is closer to this. I don't think, or maybe it is 2008, maybe it is 2012, I don't know. But this is basically NVIDIA Usain Bolt, the big difference compared to all the other GPUs. And so now let's talk a little bit about the restructuring and everything that's happened at Intel. So I've taken this screenshot from Gamer Nexus channel, great channel for everything computers, semiconductors, etc. So they showed this, a screenshot sent by a viewer, changes to employee programs and corporate services. So employee programs, some reductions there, corporate services as well. So they eliminated Air Shuttle, eliminate fitness coaching program, which again, so some luxurious stuff. But you cut costs, you do everything. You show us that the company is not performing well. And then we get to see this. Pat Gelsinger's compensation details came from Intel's 2024 proxy statement, which came out on Thursday. Well, this was a while ago, of course. The financial document showed that the Intel CEO enjoyed a 45% rise in total compensation from $11.61 million in 2022 to $16.86 million in 2023. Now again, this was before the restructuring. Now, I don't know about you, but has Intel been transformed so much in the last couple of years since Pat came in that he deserves a 45% rise? Maybe someone should sue and put it in front of a Delaware judge. Now, of course, as you know, I have nothing against Pat. I think he is the right man for the job right now. For people that have not followed Intel, they might think that Intel is in the position today because of the current management. But that is not true. Pat came in because the previous two CEOs have done absolutely nothing. They've only paid a dividend, bought back a lot of shares of expensive stock. Did they invest in the future? Not really. Did they look for opportunities to grow in other markets? Yes, but not really the right fit. And so, Intel, which was the dominant player for years and years, AMD 10 years ago, very, very close to bankruptcy, Intel did absolutely nothing to take advantage from that. Intel did not think, what do the future look like? I wonder, and invest in GPUs, data centers, AI. No, they did not. Pat came in, laid out a plan that would take 5 years. They're still 3 years in, so still 2 years left. He promised 5 nodes in 4 years. They are going to deliver on that. So that's great, right? So you cannot blame Pat for all of Intel's issues. That said, turning this huge ship around is going to take a while. Some things don't get fixed just by money. Just by throwing money at it, you cannot fix a problem. You need talent and you need time. They know it very well because they even admitted that by 2030, they're going to be the number 2 in the foundry. So they know very well that they cannot reach TSMC's level, at least not anytime soon. And let's be honest, being the number 2, not that bad. Now, let's continue. Let's talk a little bit of this whole 13 gen, 14 gen fiasco, which, by the way, I own those chips. I have no issues as of today. But from Tom's Hardware, we have here a high-end PC building company that said that its Intel CPU failure rate is lower than AMD Ryzen failures. System builder releases failure rate data, cites conservative power settings. And you can see this right here. The system CPU failure rates by generation. AMD's ones, Intel 13 and 14. Of course, there were huge issues with Intel 11, way more than the 13 and 14. So why aren't we seeing such outrage with regards to AMD? I don't know. Now, I'll say this, Intel should have addressed this issue in a more serious manner. I've been in countless forums, Reddit threads, etc., people on YouTube talking about it. And to be honest, it's ridiculous. Just be fair and say what the real issue is. Tell the people, are we going to fix it or it is unfixable? Can you get a refund? Can you get another chip? Maybe you'll have to add a little bit more, maybe not, I don't know. But at least address the issue. Don't try and hide behind screens. Don't try and lie or tell us an unverified truth. It's just not the way to go. It's sad, but I mean, I don't know. I don't know what to tell you. Let's see what happens with this issue. Now, I will tell you one extra thing here, and that's the fact that Intel is still Intel. Intel is still huge. If you don't believe me, just look at the data. If we look at the distribution of Intel and AMD x86 computer CPUs worldwide from 2012 to 2024 by quarter, yes, it's true that since 2019, AMD has been taking a lot of market share. But what has happened since the end of 2021? Intel has recovered a little bit, and AMD has not moved that much. So, yeah, Intel, in my opinion, will still do quite well in the future. Of course, if after every generation there is going to be issues, lack of execution, then maybe not. But so far, I mean, Intel has taken back a little bit of market share and they're on track to release even better products going forward. Last year, Q4 2023, this is just to show you how big Intel actually is. Okay? Shipment volume, Intel, 50 million units. AMD, 8 million units. Apple, 6 million units. Intel, 78% market share. AMD, 13 and Apple, just 9. So look, it's true that right now sentiment around Intel stock or even the company is not that great. But sometimes you have to look past the headlines. You have to take that into consideration 100% since it is a consumer-facing brand, right? When people go buy PCs, laptops, whatever, they're going to look, oh, is it Qualcomm, AMD, or Intel? Will they always pick Intel? No, probably not, especially not if they hear all these stories about a company screwing its customers. But so far, the data suggests that things aren't as bad as they seem. Now, there's still a long, long way to go for Intel, but maybe there might be an opportunity. Let's have a quick recap of what happened last quarter. So they told us that the 5 nodes in 4 years finish line is in sight, which is great. By the way, it's a great achievement. But then again, execution is key. For the quarter, it was a horrible quarter. I'm not even going to lie. Revenue just $12.8 billion. Gross margin is down. EPS 2 cents on a non-GAAP basis, down 11 cents year over year, all below their outlook. So not great at all. Same for their guidance. $12.5 to $13.5 billion, down $1.2 billion year over year. Gross margin only 38% and EPS negative here. So, like I said, not great. As for Intel Foundry, which in my opinion is going to be of extreme importance for the future, yes, it generates $4.3 billion in revenue, but it's still losing a lot of money. Yes, of course, when you want to build something like this, it's going to require a lot of money, but to be a successful Intel Foundry, you need the technologies and you need the manpower, you need the right engineers. Basically, you need the TSMC employees. As for the rest of this segment, so you've got the consumer-facing one, $7.4 billion, operating income $2.5 billion with an operating margin of 33.7%. For the DCAI, so data center, $3 billion, right? $3 billion, remember that number. Why is that? Well, one, Granite Rapids and Gaudi 3 are ramping in the second half of 2024. Hopefully it's going to be a successful one because $3 billion is not much, especially if you compare that to NVIDIA. But $3 billion, if you compare that to AMD, it's still more than AMD, right? Data center net revenue, $2.83 billion. Now, the only big difference here is that AMD is growing that by 115% year over year and 21% quarter over quarter. So yes, by next quarter, AMD's revenue from data center will probably be bigger than Intel. And that's the thing, Intel needs to play catch up. And so right now, if we look at the graph, I had to zoom out quite a lot to show you where the bottom is, well, where the bottom was back in November of 2012. We were at the same prices as we are today. Of course, on the weekly and on the daily, we are extremely oversold. Now, if we zoom in here, could this be the bottom because it was a bottom back then? Maybe. I mean, a stock can always go lower, especially if the business does not show any signs of improvement. Right now, we have a long way to go for Intel, not just the stock, but the company itself. Like they said, restructuring time, huge changes for the companies, execution is key. If there is a company that needs to execute much better, it's definitely Intel. Maybe they need to call Palantir and ask about warp speed. That might help their manufacturing. Let's wait and see. Overall, when will I start adding back to Intel? To be honest, probably not before the next earnings report, because I have a small position already. I'm not willing to put more money and for that money to be dead money for a long time. Because to see real change, it's going to take a while. Even next quarter, we probably know it's not going to be the best one, but maybe they will be seeing already something for Q4. Maybe we get more information. I have time. I gave them time before. Of course, my patience is running thin because of some screw ups here and there. But for me to actually add, it's probably going to take a quarter, if not more. Now, maybe the stock will go up between now and then. That's completely fine. Like I said, I already have a position. It's down, but if the stock goes up, I'll be down less. But I want to see the business speak for itself and less the stock. That's about it for this video. Do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.